So we will explain the transfer pricing documentation, which itself is a very lengthy process in understanding. But you must think like this. Suppose if you are transacting with an unrelated party, how will you purchase? At what rate you purchase? And at what price you sell? That the same price or the similar price you must be able to purchase, or you must be able to transact with your related parties. This is what you need to understand. Okay, so that the profit is not unduly transferred from one business to another business. This is very important if you have to claim the small business relief. Otherwise, the tax authority, FTA, might reject your purchase and sales. They might do an adjustment to your revenue, or they might do an adjustment to your transaction, which will trigger a larger tax implications to you at a later date. Now, one more very important thing which government has very specifically mentioned in the law is that artificial separation of business arrangement just to take a corporate tax advantage. For example, now you have one company and you are doing businesses in one company which turnover is about 6 million. Now you would like to avail this 3 million small tax relief. So you cannot split the business and say that now I am doing only 3 million business in two. So what they're trying to say is, for the purpose of corporate tax advantage, you want to split the business for taking this corporate tax advantage will be viewed seriously. If you are doing two separate businesses, and then to claim that if you're doing entirely a separate business and it has an entirely separate license, you can always run in two separate licenses, 3 million. But now you cannot say that I have splitted this business, same nature, same owners, but you split it into two business. This can be viewed very seriously. This is what the law has provided in the law has provided. So one must understand that we must be careful whenever we are doing any structuring we have to do for the purpose of compliance. Now they also given an option for natural persons. Natural persons include sole establishments. Natural persons include sole establishment. Now they have also provided us some relief in this case as well. Now what is this relief? In this case, there is no need to register for corporate tax if your turnover is below 1 million. Okay, so which is a very good relief, which means up to 1 million, your revenue or the turnover, you need not register with corporate tax. You need not file any tax return. You need not pay any tax. But in the case of small businesses, that is LLC companies, even though up to 3 million, up to 3 million, they have to register mandatorily. They have to file taxes mandatorily. Only tax payment is not to be done for 2 years. After 2 years, the tax payment is also to be made in the case of small businesses. But in the case of natural persons up to 1 million, you need not register, you need not tax pay, and you need not file the return as well. So which is a very good benefit which is extended for small businesses for natural persons. Okay. Now, but this natural person, what we are talking about 1 million, this is for the purpose of business or business activity having a permanent establishment in UAE or having a state sourced income. That means we have a business in UAE, we have a trade license, we are running a business in UAE, and our business revenue or turnover is less than 1 million. For that, it is applicable. Now, what and all business activities mean? It includes any commercial activity, any industrial activity, any agricultural, vocational, professional, service, or excavation. Any activities are covered as business activities. Okay. But for natural persons, what are not treated as business activity, what are not treated as an income, is employment income, personal investment income. What does it personal investment income means? That could be interest, that could be dividend. Okay. That could be from sale of shares, sale of mutual funds, sale of bonds. They're all part of personal investment income. They are also not to be treated as income for corporate tax purposes. Or also real estate investment income. Now, what is this real estate investment income? Real estate investment income means is an interest rental income from properties. It could be commercial property or it could be residential property. But the same commercial or residential property, if that is owned by an LLC company, then that is part of the corporate tax. It's only not part of corporate tax if it is only held by natural persons. This is very important distinction one should make, that if they already have a property in LLC company, then one must take care of this aspect. Okay. Now, the other part which I said, non-resident persons will also need to, have the tax, and also have a tax implications. But they must understand that they must check with a tax implication, have to check with double taxation agreement with UAE. For example, any Indians who are coming in here doing businesses, but they are tax resident in back in India, then they have to be liable to pay tax under non-resident category. But they cannot just decide as non-resident and pay tax. They must understand the implication of double taxation between both the country, and after that only they need to take the next step. I think one must take advice from a consultants, because this is a very gray area. People who are coming from outside UAE, who are not a resident in UAE, who does not have any resident visa and so on, they only come occasionally and do business, or they come and do some transactions here. One must need to refer that with double taxation, and then understand the implication before they comply to the corporate tax under UAE. So now, what are all the corporate tax applicable? Even though we know generally what is it applicable, that let us also cover for free zone. How does it makes a little bit different? One is individuals and juridical persons, 0% up to 375, 9% after 375. Okay, that is for individuals and juridical persons. Juridical persons means like LLCs and the registered entities. Okay. Second one is free zones. You see, in the corporate tax, they have not used the word free zone. They have used the word qualifying free zone persons. What do you mean by qualifying free zone persons? That means you may be in a free zone, but you need to check whether the free zone in which the business is located, whether that is a qualifying free zone. What is qualifying free zone? It's a zone, free zone, which is approved by the law, which provides a tax benefit or a tax relief to the businesses. So one must write to their respective free zone or contact their PRO and get it clarified that whether the free zones in which their businesses are there, whether they are having a corporate tax exemption as approved by the law. If the corporate, only couple of, only maybe 10, 12, are the free zones which are qualified for the corporate tax benefit. Not every free zone in UAE is getting the corporate tax benefit. So one must know that just because they are in the free zone does not mean that they are in the qualifying free zone. If they are not in a qualifying free zone, straight away 9% tax is applicable. If they are in qualifying free zone, to get that 0%, there is a lot of steps to be followed, but that is something that we can cover it in another session. But we will do a small brief on that so that you can understand it is that to get that 0%, how much effort businesses have to make. Is it worth making that effort is something that also we can look at it. For small businesses with small profits, sometimes you may feel that getting that 0%, is not worth, or that claiming that 0% is not worth, because it comes with a lot of other risks. Okay, that we will cover it up in a very brief way so that you can understand. Okay. Now, how do we make the tax computation? Before coming to the tax computation, we will have to understand what expenses are not allowed as expenditures in the corporate tax. Okay. Apart from other things, the first is any payments which are not, which though it is mentioned as bribe, any payments which are not having a adequate justification, which you cannot explain why it is, it can be the law can disallow that. Fines and penalties are not allowed. The zakat or donations to non-qualifying public entities is also not an expenditure. Dividends and other profits distributed to owners is not an expenditure. Okay. Then any expenditures any expenditure which are not for wholly for the business. Okay, any personal expenses are not a expenditure. Like for example, now you may be paying rent of a director's house. You may be paying telephone bill of the director's house. Okay, all these are all can be a questionable expenditures. You cannot say that it is a business expenditure. It is a personal expenditure of the shareholder or the promoter. So one must know that earlier these distinctions were not made in businesses. They thought that every expenditure is our expenditure. Even we have seen some of the cases, the children's education fees paid from the company books. A lot of personal expenditures were booked into the company books. Now that is not allowed. So one must know that these expenses, if it is allowed, tomorrow the authority will reject it, then you might have to pay with penalties, in this regard. So one must plan this very clearly. Second is very important is if you are booking an expenditure of A business in a B business, then that is also not allowed. Okay. Suppose instead of you might have salary booked at one business, but they are also doing services in the other company as well. So these kind of things are not allowed. So one must plan this well in advance so that you will not get a penalty from the corporate tax authority. And next is there are a lot of expenditure we book in the books saying that entertainment expenditure or maybe business development expenditure. Only 50% of that is allowed. Remaining 50% is treated as not a business expenditure. Why this has been put in place? Because if suppose family goes also, we treat it as business expenditure and then we put it. They say law does not argue with you. They say that even if you have spent 1,000 dirham, I'll allow only 500 dirham. So this is how it is treated as. Okay. Now, next is very interestingly is interest expenditure. Now, if you are, if you are spending interest expenditure, which are more than 12 million, up to 12 million, you can claim it in the books of account in the same year. If the interest expenditure is more than 12 million, that is only 30% of the, your EBITDA or 12 million, whichever is higher is provided. Okay. So this is one interesting thing which they have said. Apart from that, personal expenditures and all, as we explained. So one must be careful about claiming expenditures in the books of account now. You cannot say that anything and everything relating to various businesses, I'll put it in one books. These kind of things will not be allowed. Okay. When you have multiple businesses, respective expenditure to be booked in respective businesses only. Okay. So this care should be taken. Now, this is how generally, how the tax liability will be computed. Net profit before interest and tax, and then, all other exemptions like foreign PE, unrealized gains. Unrealized gains are not like, for example, in businesses, you might have trademark, brand, and all this thing. So any gain or loss on that, we can claim it as a deduction. And, intra-group transfer of asset. That is, if you're for the one time, if you're transferring asset from A company to B company, which is owned by same promoters, that also you get there is no tax to be paid on that, and interest expenditure is there. This is just a simple calculation, and we can elaborate it on a case to case basis. But one must know that up to 375 for a mainland company, up to 375 tax is zero. Above 375 only tax will get deducted. This is how generally the tax computation is followed. Now, I think we can also kind of run through on the for 5 minutes on the free zone person. So one must know that free zone person does not mean that directly you can say the tax is at 0%. You cannot say that. Only if you're earning a qualifying income. Now, what is qualifying income? If the businesses, if you are located in a qualifying free zone, that means you are a free zone company, but your free zone in which your business is operating, it is a qualifying free zone. Okay. And it is carrying on the below activities, whatever activities we are listing, like fund management, treasury, manufacturing of goods or materials, logistic services, distribution of goods or materials within the free zone. Only when your activities are in the specified activities, only when you carry on these specified activities and it is carried with the free zone persons, then only your tax at 0%. That means then only you can be say that I am having income from qualified activities. After that, once you ensure that you are having any one of these activities and you are getting 95% of that income, if you are getting that 95% of the income from only qualifying income from the qualifying activities, then only you are eligible for 0%. Otherwise, you will not be eligible for 0%. For example, let us take your turnover is about 10 million. This 10 million is revenue is coming from manufacturing of some food items. Okay, this 10 million is coming from. In that, your revenue out of 10 million, 9 million is coming from manufacturing of selling of food items and all this thing. Maybe 600,000 is coming from transportation or some other activities. Okay, and maybe 400,000 is coming from other activity which is not at all a qualifying activity. Now, what happens is 400,000 divided by your 10 million, okay, will be about 4%. Okay, since this non-qualifying activity or non-qualifying income is only 4%, then your 96% is from qualified activity. Because of that reason, you will be eligible to get 0% tax. Now, for example, you will have only 9 million as from a sale of manufacturing of goods, from sale of goods which are manufactured, but 1 million is coming from other activity. Other activities are excluded activity. Okay, for example, excluded activities. Now, if it is coming from excluded activity, which is 10%, which is 1 million, then you will not be eligible for 0%, and you will have to pay tax on the entire profit. Now, one major differentiation between mainland to free zone is, in free zone, you have a slab up to 375, 0, above 375, 9%. But in free zone, there is no slab. Either you will get 0% or you will have to pay 9% on entire profit. Suppose out of 10 million, you made a profit of 500,000. Okay. Under mainland, if you have made 500,000 as profit, on up to 375, 0, on 125 only, you have to pay 9%. Okay. But in free zone, it is not like that. On entire 500,000, you will have to pay 9%, which means to say one must need to understand your tax implication before you opt for this qualifying free zone, tax relief. Okay. If you want to avail this for free zone, then one must know that you should not do any other businesses. You must not mix the businesses in free zone so that you don't get into problem at a later date. Okay. So you have to choose whether you would like to go with free zone benefit or you would like to go with mainland taxation. You have an option to choose as well. So once you elect it, then you need to follow that. Now, one more a dangerous provision is there for free zone, qualifying free zone is, suppose you are a qualifying free zone and 1 year you made a mistake of having more than 5% from excluded activities. In that case, if you for 1 year you are rejected for that you are not a qualified free zone for 1 year, the next 5 years you will not be able to claim the 0%. That means for next 4 years, that is the current year and the next 4 years, you will have to pay tax as a mainland company or as a normal company, not as a free zone person. So one must know that for every year, you need to plan your operations properly. You need to dissect your excluded activities. You should not mix various activities into the free zone, qualifying free zone activity company, so that you will claim this 0% benefit properly. Okay. Now, this is some illustration how this will happen and things like that. Okay, which is excluded activity and income from. So one small differentiation is in this case is, if you are having an immovable property in a free zone, that if it is rented out to only a free zone person only, it will be treated as qualifying activity. Okay. For example, you have one free zone company and you are doing 100%, you are doing only manufacturing activity, no other activities there, but you have a commercial property there, and that commercial property you have rented out to a non-free zone person. Then that activity of renting, which is to a non-free zone person, will be treated as excluded activity. Then you might have to check whether that 5% threshold will be breached or not. So one must need to understand that that 5% limit is there in the free zone. If you cross that 5% threshold from an excluded activity, you will have to pay tax on the entire profit. Okay, so this is very important update. One must plan your transactions properly. Now, there is one small transition rule is there, which I would like to explain, that the companies or any companies which are having properties in their books of account. Okay, if you might have purchased this property maybe 10 years back, but you are selling it in this corporate tax period. Now you might have bought it at very low price, maybe 100,000 dirhams you might have purchased, but now you may be selling at 3 million, 4 million, depending on the property. Now, as per corporate tax, if you are selling a property during the tax period, you have to pay tax between your original cost, between your cost and the selling price. Since you are holding this period before the tax period, the government has given one-time relief. Government has given one-time option. You have an option to restate your value of property as on 1st June 2023, so that, suppose for example, that the property which you purchased in 1995 at 100,000 dirham, now it may be 3.5 million worth. Okay, so that 3.5 million cost you need to bring it to the books of account, so that when you sell it for 4 million or 5 million, you'll pay only on the differential 5 million to 3.5 million, only on the differential gain only you have to pay tax. If you do not elect this one-time relief, then you will have to pay tax from 100,000 to 5 million, which will be very high. So this you must connect your consultants, because we can help you out to set up this higher cost in the books of account, so that you need not pay tax on this pre-tax period holding. So this you can connect us. We can help you out in valuation and all these things, if there is any such properties are there. Okay. Then, so how do we go forward? On the conclusion, how do we go forward? How do we implement it? You please review your, you make one impact assessment of the corporate tax based on your business, just to ensure that which option to go, whether I would like to go with mainland tax paying option or free zone option. So one can make a detailed impact assessment. We can do a detailed impact assessment if you want it, so that it will help you to decide whether I should opt for a particular option or B particular option. Okay. So identify what is the best tax structure it is applicable for you, so that we can do a tax planning for you, and then it will help you to plan your taxes if any tax implications are there. Third thing is review your contracts. If you are doing a lot of transaction with related party, review your contracts, have a proper documentation between related party transactions, so that the pricing and all is documented. Okay, and then those things can be taken. And the fourth thing, very important, is if you have you have a partnerships which are not registered partnership, or if you have a partners which are not in the books of account but we are paying salaries, there are a lot of implications. There are a lot of unorganized business structure will be there. We have to review that unorganized business structure and make sure that it is organized, so that you get all the tax benefit. See, one of the thing is many people will be knowing that salaries now, many businesses, the owners does not take proper salaries. Okay, that proper salaries, why it has to be taken now, and there must be a proper contract between the companies and the owners, or companies and the partners or managers or directors, because you cannot suddenly increase your salary from 10,000 to 30,000 or 50,000 under corporate tax scenario. One must follow certain corporate law, corporate tax principle before they adhere to increase in salaries or making higher salaries to their family members or the owners. So one must make a proper organization structure, so that legally whatever you are claiming is allowed by the authority. Okay, and if there is any system issues, if your accounting is not proper, if your books of accounts is not kept properly, one must make sure that you keep the proper books of account. On the point of books of accounts, as per corporate law, 7 years what books of account to be kept, 7 years your bills has to be kept, 7 years your books of accounts to be kept, so the authority has time for looking into your books for 7 years. So one must keep your books account for 7 years. Okay. So with all this summary, I think we can go to a question and answer sessions, and then we can take it forward. Over to you, Yasir Bhai.
Thank you so much, Santosh. That was a great session, a detailed session. Thank you so much once again. So for the benefit of our audience, I think it's like if you can just sum up
Yeah.
like what exactly you've gone through, like in one sentence each, what exactly is the corporate tax? Then when is it going to be implemented in UAE? How is the registration process? When is the last date or deadline for the registration? And when is the deadline for, I mean, maybe when is it going to be the first tax return filing?
Okay.
So if you could just cover in one word, one sentence, all these things, maybe we can summarize that. That will be great.
Yeah, sure. Yes. Now the corporate tax is already implemented. It is started from June 2023. Those financial year whose financial year is July 23 to June 24 is the first tax period. Now the first 44 is the tax registration deadline. That means 6 months before the end of the tax filing period. Up to 1 million turnover, natural persons, they need not register.
Okay.
Rest all have to register.
Thank you so much. Let me just check if we have any questions from the audience. We have a quick few minutes. If any questions, maybe we can take it.
Yes.
Let's. No, let me just go through the social media, because this session is broadcasted live across all iPost channels in YouTube, Facebook, and LinkedIn. So let me just check. Also reach out to him directly. Thank you so much.
Thank you very much. Yeah.